the difference between senior secured tranches versus unsecured tranches?
The popular misconception that something being unsecured might be more likely to fail. Well, this is actually not true. We take this opportunity to basically get a better return. I just want to clarify a few things. So there are more types of tranches and juniority, seniority in between so-called securitization transactions and the balance sheet lending. I just want to make clear at the beginning that we actually do a balance sheet lending. We do not participate yet. We haven't participated in the securitization transactions. So securitization works differently. Whatever I say, it relates to the balance sheet lending. So in the balance sheet lending scenario, both senior secured tranches and senior unsecured tranches are senior. So it means that in case of delinquency of the issuer, we are the first ones to be paid, and all other creditors which might be subordinated, junior, they will get paid after us. So even if the deal is unsecured, it is still senior unsecured. It means it is sitting on the top of the pecking order of the creditors. Also, second note which I wanted to highlight, this is the popular misconception that something being unsecured might be more likely to fail. Well, this is actually not true. The probability that the issuer will come into delinquency with the payment, it doesn't depend where we as a creditor sit in the pecking order. Our pecking order determines the likelihood of the recovery of the delinquent payment. So that's why the probability of delinquency default is the same, but the recovery when you are unsecured is more complicated because the senior secured creditors sit on the top, and they have the collateral which they can sell, and the proceeds of the selling the collateral goes only to the senior secured creditor. If you are the unsecured creditor, then you are the right below, so you will get all the remainder of the assets. So they are the assets which are collateral, they are taken out of the equation, but we still what is left as a senior unsecured creditor, you are still on the top of all the creditors. So that's the difference. And you might have noticed that when we issue unsecured deals with our issuers, we typically do it with the bigger ones, and after some time we have spent in the relationship, we took a lot of comfort in creditworthiness of the issuer, so that we say, okay, fine, we can take an unsecured tranche and request a higher return to our investors in exchange for being invested in an unsecured tranche, but we believe that the overall risk is not significantly higher, and that's why we take this opportunity to basically get a better return from the issuers where we already have a relationship, we already have a senior secured loans, and we can go so-called deeper into their capital structure.
And can investor expect more unsecured tranches moving forward?
Well, it's not going to be the majority of the tranches on the platform, so the majority is still going to be senior secured, but we are increasingly doing the unsecured tranches with our best issuers, and the reason is that we have such inside information about how the issuer works, how the underlying loan portfolio performs. We have quarterly talks with the management, that we are happy to take this additional risk on the recoverability. So yes, there will be more, but it's not going to be the majority.
Understood. Thank you very much. That was very comprehensive.
You're welcome. Thank you for the questions.